Is your money sitting in the bank and quietly losing value? If you have thousands of dollars parked in a savings account, this video could save you a lot of money. Because the Federal Reserve is expected to cut interest rates soon, and when that happens, the returns on your savings could start dropping fast. The banks paying you 4% or even 5% today may be offering significantly less just a few months from now. That means your money could start earning less without you doing anything. But here's the good news. You still have time to prepare. In this video, I'll show you exactly what smart savers are doing before the next Fed rate cut, where you should consider moving your money, and how to lock in today's high rates before they disappear. Let's get started. First, let's understand why this matters. The Federal Reserve is America's central bank. When the Fed raises interest rates, banks usually increase the rates they pay on savings accounts, CDs, and other deposit products. But when the Fed cuts rates, banks tend to lower those rates as well. And that's where savers get hit. The lower the interest rate, the less your money earns over time. So what should you do before the next rate cut? The first option is a high-yield savings account, also known as a HYSA. If your money is still sitting in a traditional savings account earning almost nothing, you're already missing out. Many online banks and financial institutions have been
Platforms like
offering some of the highest
Marcus,
savings
Ally,
rates in
and SoFi have attracted millions of savers by offering much better yields than traditional banks. But here's the catch. Those high rates probably won't last forever. As the Fed begins cutting rates, HYSA yields are likely to move lower too. That's why many financial experts are looking at another strategy right now: certificates of deposit, or CDs. A lot of people think CDs are boring, but in a falling rate environment, CDs can become extremely valuable. Why? Because a CD allows you to lock in today's interest rate for a specific period of time. Imagine you can get a 1-year or 2-year CD paying around 4.5% or even 5%. Once you lock it in, your rate stays the same, even if the Fed cuts rates multiple times in the future. That's a huge advantage. And there's an even smarter strategy called CD laddering. Here's how it works. Let's say you have $20,000. Instead of putting all of it into one CD, you divide it into multiple CDs with different maturity dates. For example, $5,000 in a 6-month CD, $5,000 in a 1-year CD, $5,000 in an 18-month CD, and $5,000 in a 2-year CD. This creates a ladder. Every few months, one CD matures and gives you flexibility. You can reinvest at new rates, access cash if needed, or adjust your strategy based on market conditions. At the same time, part of your money remains locked into today's higher rates. That's why many experienced investors use CD laddering as a risk management strategy. Now let's talk about a mistake many people make. They assume that because their money is sitting at a large bank, everything is fine. But that's not always true. Traditional banks often pay some of the lowest savings rates in the industry. Many people keep their money at big banks simply because it's convenient. The problem is that convenience can come at a cost. You could be leaving hundreds or even thousands of dollars on the table every year. That's why you shouldn't choose a bank based only on its name. Pay attention to interest rates, FDIC insurance, fees, accessibility, and flexibility. Now, here's the most important takeaway from this video. Time is running out. If the Federal Reserve begins cutting rates in the coming months, savings yields are likely to fall right behind them. The people who act now can take advantage of today's higher rates. The people who wait may end up earning much less on their cash. So take a few minutes today and review your saving strategy. Find out where your money is sitting, compare rates, and if you're looking for stability, consider whether CDs or a CD ladder could make sense for your financial goals. If you found this video helpful, hit the like button. Let me know in the comments where you're currently keeping your savings. And for more US financial updates, smart money moves, and wealth building strategies, make sure you subscribe to Bull and Dollar USA. Thanks for watching, and I'll see you in the next video.